So Vail Resorts just dropped their latest earnings, and honestly, at first glance, kind of confusing. But then, the stock just took off. So what in the world did Wall Street see that the rest of us might have missed in the headlines? Well, that's exactly what we're going to unpack right now.
All right, here's how we're going to break it all down. First, we'll look at the big numbers that everyone saw. Then, we'll get into management's playbook, and this is where the story really starts to change. After that, we'll see how the market reacted, and spoiler alert, it was big. And finally, we'll wrap up with our take on what comes next for the stock.
All right, let's jump right in with those headline numbers. And right away, you can see why people were a little confused. It was a classic mixed bag right out of the gate.
So, check this out. On one hand, they beat their earnings per share, or EPS, by 3 cents. Not a huge beat, but hey, a beat's a beat, right? It shows they're keeping costs in check. But, and this is a big but, they missed on revenue by more than $2 million. That immediately gets you thinking, is demand starting to soften up?
And this really lays out the central conflict, doesn't it? You've got this good news about profits sitting right next to this not-so-great news about sales. For any investor looking at this, it's the perfect setup for some serious head-scratching. What do you even do with that?
So with that confusing picture, all eyes turned to management. How are they going to handle this? Well, instead of getting defensive, they came out with a really clear, confident story about where the company is headed.
Right away, the CEO, Rob Katz, basically said, hey, this is all part of the plan. He framed the quarter not as a setback, but as proof their strategy was working. He used this phrase, encouraging early momentum, which is a really smart way to get everyone to stop looking in the rearview mirror and start looking at the road ahead.
And this is where it gets really interesting. They lead out what I'm calling the pass paradox. Yeah, the actual number of passes they sold dipped by about 2%. But, and this is key, they jacked up the prices by a solid 7%. The result? Total revenue from passes actually went up by 3%. That's a huge flex of their pricing power.
Okay, so then they laid out their game plan for growth, and it's basically a 3-part attack. First, they're going after the casual skier, the person who doesn't buy a season pass, with new deals. Second, they're totally revamping their marketing to hit up social media and influencers, to get in front of a younger crowd. And third, they're spending big bucks, over $234 million, on upgrading the actual resorts. Think new lifts, better food, and a slicker app.
So you've got the mixed results, and you've got management's story. The big question is, which one did the market believe? Well, it turns out Wall Street completely bought into the future and basically just shrugged off that revenue miss. And here's the proof in a single number. The stock absolutely exploded, jumping over 9% the very next day. I mean, that's not just a little bump. That is a massive vote of confidence from the market. And to really understand how big that move was, you have to look at what the smart money in the options market was expecting. They were betting on a move of around 5.5% up or down. The fact that the stock almost doubled that to the upside, well, that tells you this was a huge surprise that caught a lot of people on the wrong side of the trade. So, what was the magic bullet? What caused this massive shift in sentiment? It was one thing. Management stood by their full-year guidance for EBITDA. That's a key profitability metric everyone watches. Before the call, there were real fears they were going to have to cut that guidance. When they said, nope, we're sticking with it, all that fear just evaporated. Suddenly, the Q1 miss didn't matter anymore. All that mattered was management's confidence in the full year.
Okay, so that's the story of what just happened. But the real question for investors is, what happens now? Let's get into our take on what's next for Vail Resorts.
After a monster 9% rally, you really have to ask, is all the good news already baked into the price? What's the trade from here?
All right, so we're initiating our rating here at Market Perform, and here's why. That strong guidance from management probably creates a nice floor for the stock, but, and it's another big but, now they have to actually deliver, and there are some very real risks heading into the winter season.
So here's the thinking. The market loved the story, but stories are one thing, results are another. This new playbook sounds great, but it hasn't been tested yet. And it all depends on 2 huge wildcards. The weather, you gotta have snow, and whether people are still willing to spend money. So we think things could get pretty volatile around the holidays and that next earnings report as everyone looks for proof. Because of that, one potential play could be a long volatility strategy, something traders call a straddle. That's a trade that could pay off if the stock makes a big move, either up or down. Basically, you're betting on a big surprise. This is not financial advice.